Touch, your CPA tonight, a member of SOFA, the Society of Financial Awareness, which SOFA's mission and vision is to help eradicate financial illiteracy in America and around the world, one community at a time. And we're starting with this community. So thank you for joining us. As well, I've shared with you before, we have set up a website. You can check it out on the web, financialliteracy.info. That's financialliteracy.info. The previous two shows, the recordings were done and will be posted on the website sometime this week. So if you missed the past 2 weeks, you're going to be able to catch up, because what we're developing for you is a series. So we are developing a personal economic model. So if you have missed one or you have missed the second one, you're going to be able to catch up, and then we're going to try to do it somewhat systematic, just as if we are in school, because we are in school. It's Sunday school at night. So we just want to thank you again for joining us. So what we have spoken about so far is that each individual has to develop a personal economic model. And in the first program, we gave you an overview. It was an high-level overview. Last week, we went back down and we shared with you Financial Literacy 101. So some basic stuffs about acquiring income. How do you earn income? How do you minimize expenses? How do you manage your budget? How do you manage credit cards and so forth? So we're taking another step now in that direction as we guide you, because we are hoping that you will not be a part of that statistics. We share the statistics that FINRA gave, that in 2014, Americans were 63% financial illiterate. 63% in 2014. That statistics have increased since, but we don't have the exact number. When we have that exact number, we'll share it with you. But in this community, we are going to go against that, because we are not going to make that statistics. You know, our hope is that as we share with you, you're not going to be in that statistics where you're going to be able to say you got financial literate. Financial literate, because we're bringing it to you. You have us on Sunday nights 9 to 10, but that's not the only time you have access to us. You have access to us 24/7. You can reach us on the website, as I mentioned, financialliteracy.info. You can email us, support@financialliteracy.info. You can go on there, make comments, have questions, and we will certainly get back to you within 48 hours. We'll even be bold enough to make that statement that we'll get back to you within 48 hours. But for tonight, the lines are open. You can contact us with any questions, and we will address your questions on the air. If there are certain things that we cannot, then we will set a time with you and we'll address it off the air. But the lines are open in Broward, 954-792-1170, Miami-Dade, 305-948-1170. So let's get into the program. So we're talking tonight about tax planning, the importance of tax planning. Tax planning is so important. It's that the process of tax planning allows you to arrange your finances in a way to meet your financial goals. That sounds kind of lofty. What does that mean? It just simply means that everything you do related to finance, you will have to have some tax consideration, because you may say, well, you don't earn enough money, so tax planning does not mean enough to you. That's a myth, and we are hoping that we're going to be able to dispel that myth. Tax planning is relevant to everyone, especially if you're living in the United States of America. So we're going to assume that that's you also. So we're going to dive into it. We're going to share some insights with you regarding tax planning. We mentioned before, and it's a terminology that you're going to constantly hear me use, lifetime capital potential. If you remember, we talk about the lifetime capital potential being the the potential of our earnings and our investment over our lifetime. And we also shared with you regarding the train in that sense. Once we get on that train, we don't know when our stop is going to be. So we don't know when our life is going to end. So it's very imperative that we have plans accordingly, that our money will last throughout our lifetime, even though we don't know it, but at least we can prepare. One of the number one impediment to your money lasting throughout your lifetime to maintain that lifestyle you have is taxes. Taxes is one of the greatest, not one of. I will stick my neck out and say tax is the greatest impediment you have. So I believe it is very necessary that you have a basic understanding of taxes, how it works, what does it affect, and how can I help to minimize my tax liability. Judge Learnand of the Supreme Court in 1932, Judge Learnand shares that it is the right of every United States resident and citizen to minimize their tax liability as the law allows. So if the Supreme Court is going to say that, I just believe that it's imperative that you have some understanding, because if you are not literate in the manner of tax planning, how is it that you're going to help to minimize it if you don't know anything about it? So we're hoping that we can share some with you. And as I said, tonight is a basic. Later on, we will get into more advanced tax planning, and advanced tax planning in some ways will have to be from a personal standpoint, because not everyone will need advanced tax planning, but most individuals will need basic tax planning. So that's what we're going to share with you tonight. All right. Some of the ways there are three basic ways. There are three basic ways that taxes affect us, the tax code affect us, in the sense that we can reduce the taxes in three basic ways. We can reduce our income. That's not a very good way, but that's one of the ways. We can increase our deductions. That's a very positive. And we can also increase our tax credits. But if we don't know what they are, how are we going to do that? So that's why it is necessary for you to know, because for us to make that adjustment, then we need to know that. So those are some of the stuff that we're going to be talking about. Now, we are in January. One of the common mistakes is misunderstanding tax planning versus tax preparation. We're in January. Tax preparation goes most years from January through April. And at sometimes, yes, you can make extension and then you can file it later in the year up through October 15th. But that's for tax preparation. Tax planning in itself, though, is a different beast, in the sense that tax planning takes on a more proactive strategy with long-term effect, in the sense that tax planning doesn't happen in January. January is tax filing, so it is necessary that we make those plans throughout the year, to help with that long-term strategy. Tax planning also helps align our overall goals with our tax exposure, because I mentioned before, you're going to have tax exposure, and if we don't have goals to minimize it, then we're going to be paying excessive taxes, sometimes unknowingly and unnecessarily. Taxes can also be, the tax planning can also be extremely helpful for complicated filings, because you have different individuals here where some is gonna be simple and some is gonna be complicated. One of the key phrase that it's necessary for everyone to know is adjusted gross income. So most of us know that what our income is, but sometimes a mortgage broker or someone, or not even that, or even with the Affordable Care Act, one of the things that is calculated from is your adjusted gross income. And sometimes individuals are not aware of what's my adjusted gross income. That sounds like such, oh my gosh, that's a terminology that I'm not aware of. But it's a terminology you should be aware of because it's on every tax return every year. Because most things that are measured, whether it's going to be mortgage filings, whether it's healthcare filings, most things that you're going to apply for when you hear debt to income is being measured, a lot of times the adjusted gross income will be used. So with that being said, what's adjusted gross income? Adjusted gross income is defined as gross income minus adjustments to the income. But that says, wow, what does that mean? That's just using play on words. All right. Some of the most common adjustments to your income that, a lot of you may be familiar with are 401k, money that you contribute to the 401k, money that you contribute to your IRA, which is 408a. Then you also have IRA, Roth, 408a, which is not a deduction. So I just want you to be aware of that, because sometimes an individual will have a Roth IRA and thinking that they're going to get a deduction. They're not, because Roth IRA does not come under deduction. Then you also have 403b, 457. And later in, we're going to introduce you to another concept. We're going to introduce you to 7702. Right now, most of you may not even be aware of that. So, I want you to stick and stay. We're going to break shortly. We're going to break for a short commercial break. So stick with that dial. Don't go. We will be right back with you.
Financial Literacy is an educational program which airs on Waves 1170 every Sunday night at 9 p.m. Hosted by Hubert McIntosh, a CPA and member of SOFA, the Society for Financial Awareness, with the number one goal: assist individuals to take charge of their personal finances. Please join us every Sunday night at 9 p.m. on 1170 a.m. or via your smartphone app, Waves 1170, or on the internet at waves1170.com. Get up with Lifeline Tax Incorporated for tax preparation and tax planning services. Lifeline prepares all forms of tax returns: 1040 personal, corporate S&C, partnership, trust returns, and all other federal forms. Go to lifelinetax.com or call 561-244-0062. Contact us to help you with your Lifeline to a better tax future. Go to lifelinetax.com or call 561-244-0062.
Are you looking for an accounting firm that you can trust? One with a client-first philosophy? Well, don't worry. Every little thing is going to be all right. For the dedication to professionalism, responsiveness, and quality, Remap offers a variety of services, from bookkeeping and tax preparation to payroll services, IRS problem resolution, and retirement planning. Don't play games when it comes to your money. Go online and search remap.com. That's RE-MMAP.com, or call us at 561-623-0241.
Meet Bob.
Hello, everyone.
Bob searched and searched for insurance, but grew frustrated with the high number of options.
Oh, no. What am I going to do?
Then Bob contacted the McIntosh Insurance Agency.
Bingo.
The McIntosh Insurance Agency helped Bob get affordable insurance that fit his unique needs.
Oh, I'm happy I found this guy.
Be like Bob. Go to McIntoshinsuranceAgency.com or give them a call at 561-300-2444.
You won't be sorry.
For more than 30 years, Wealth Management and Distribution Group has been helping people save, grow, and protect their money. Wealth Management and Distribution Group was formed with the purpose of helping individuals, entrepreneurs, and small businesses to maximize their ROI by minimizing their tax liabilities. Protect your assets and the assets of your loved ones. Visit WMADG.com for more information. That's WMADG.com, or give us a call at 954-701-4730.
Welcome back. Welcome back. Thank you for sticking and staying. Just on the other side of the break, we were talking about some of the most common adjustments out there. We mentioned 401k, IRA, 403b, 457, and we started to introduce you to Internal Revenue Code 7702. That's also a retirement plan that it's also imperative that you need to know that also. So make a note of that number, and on future shows, you will be hearing about 7702. Other adjustments that we look at, and this one sometimes goes overlooked: moving expenses. Sometimes moving from one location to another for job related, if it's more than 50 miles from the previous job, sometimes you can take moving expenses deduction. This is one of those. Sometimes it's overlooked because people are not realizing that this is a deduction that I can take. So sometimes it's very important that you're dealing with a tax advisor. You know, I know there are a lot of softwares out there and it promotes it that you can do it yourself, but initially your tax may be simple, but as it goes on, it could get a little bit complicated, and that's when you would need professional advice. So be careful of that. Another deduction out there is also tuition deduction, tuition deduction, student loan interest. And another one that goes unnoticed sometimes are educators and teachers deductions. Like sometimes teachers may not even be aware that the supplies that they buy for their class, like sometimes individual teachers may buy supplies for their class that the school did not provide, whether it's crayons or if they're doing some kind of a project with the students. Those supplies that those teachers buy sometimes can be a tax deduction. So be careful on that also, that you are making sure that you are maximizing your deduction. So that again is another thing, whereas doing it yourself, sometimes that will go unnoticed. So talking about further now, after adjusted gross income, there are some other opportunities you have to still reduce your taxable income, and part of that is deductions and exemptions. So sometimes one individual may qualify it and another may not. So it's very important also for those of you who are dealing with a tax professional. Sometimes in our tax office as a CPA, sometimes we'll give a client a tax organizer, and sometimes it's a 3-page, and it's just asking questions about what may have changed. And the client may think that, well, nothing has really changed, so I don't need to take the time to go through the tax organizer. But why we do that is we want to make sure that we are helping clients maximize their deduction, because sometimes even a child may be born, someone may get married, they move, an additional child, and even in a case of where it's a foster child, sometimes these are deductions. And one of them that also goes unnoticed, where a lot of people are making this mistake. I was talking to a friend of mine the other day, and she was helping her father in that she was paying the fees for his assisted living facility, and she did not realize that this was a deduction that she could take because she's thinking that he's not a dependent. So these are some of the things why it is so critical that you're dealing with a professional, because you may be just leaving money on the table and just leaving it to Uncle Sam. If that's your choice, then I can understand, but we are here to educate you so that you know your options. Another set of deductions we're going to talk about: business owner deductions. And before you shut me off there and says, well, but I'm not a business owner, so I don't have any business deductions. One of the things sometimes I get individuals who will bring 1099. The minute that you get a 1099, you are in business, because you have W-2, which is the main form if someone is an employee. But once you start getting a form 1099, then you have gone over to the other arena as a business owner. So there are business owner deductions that you'll be able to take when you have a 1099. So just because your business did not get incorporated, it doesn't mean that you don't have business owner deductions. We'll encourage you that you can get incorporated, but until you decide to do that, don't let those expenses go away, because sometimes you're using your home office. There are home office deductions. There's stuff that you're using related to getting that 1099 income, whether it be telephone. You could be using your telephone. You could be buying a subscription to something. It could be a software. You could be buying a software related to that, generating that income. Travel, you're going on a job or something like that where that you're getting paid for related to that 1099. You can take travel expense, meals and entertainment, utilities, a lot of these things that you'll be able to take. And there's one where a lot of people don't realize, even though they might just be getting a 1099 and they may be filing a Schedule C, retirement contribution. Retirement contribution can also be a deduction, and it does not necessarily have to be a 401k or an IRA. So these are some of the things a tax professional will be able to help you with. So keep that in mind. So the lines are open. 954-792-1170. 954-792-1170 in Broward. Miami-Dade 305-948-1170. So we are here to take your calls. So we have touched on some topics, and I know you have some questions out there. So give us a call and let us help you by addressing some of these questions that you may be pending on your mind. You can also go on the website, financialliteracy.info, and you can put your comments there. You can put your questions there. You can also email us at support@financialliteracy.info. So, okay, let us help. We are here for you. Utilize our service. The next one we're going to talk about is tax credits. And some of you may be just hearing these terminology, but everything that I've just mentioned to you, everything since the program started, is on the first 2 pages of your Form 1040. Everything. So, but because there are so many lines, sometimes it may seem complicated, and yes, and sometimes it is complicated, but utilizing the services of a professional can bring those complicated items to be simple. So, sometimes you got to be careful of, you know that saying, I always give you a saying from Jamaica. That saying, penny wise and pound foolish. I don't know if that's a Jamaican saying or an international saying, but don't be penny wise and pound foolish, because you may be thinking that you can file the taxes yourself and you don't necessarily have to seek professional advice, and because you might be saving $100 or saving $200, but that $200 that you think you're saving sometimes may be able to generate you an extra $1,000 or $2,000 depending on your circumstance. Okay, so keep that in mind. The next thing we want to talk about is tax credits. Yes, and it's still on the 1040. This is on the page 2 of the 1040. There are mainly 2 types of tax credits. There are refundable tax credits versus non-refundable tax credits. Yes, it sounds like it's complicated, but some of the refundable tax credits, we have spoken about them before. Refundable tax credits are earned income credit, excess social security credit, additional child tax credit, health coverage tax credit, American Opportunity Credit. American Opportunity Credit is one of those credits for tuition where if you're going into a higher education or one of your dependent is in higher education. The other type we mentioned is non-refundable tax credit. And sometimes this can be a little bit confusing. So because one of the key ones there is child and dependent care credit. What we see as confusing so much, sometimes a parent may pay tuition fee for their 7-year-old or their 8-year-old, and they may pay $4,000, and they're thinking, well, wow, I can get back that $4,000. But that credit is a credit that's considered a non-refundable tax credit, where you're only getting a percentage up to $3,000. So you're getting 20%. So you may pay $4,000, $6,000, $7,000 for the child, but you're only getting a limited amount, and that amount is 20% up to $3,000 for one child. If you have 2 children now, then that amount will be doubled based on what you pay for that child. So these are some of the things, again, why it is so important that you're dealing with a tax professional, so that you don't miss out on any of these opportunities, because there's so many opportunities in the tax code. Because the tax code, and sometimes you may ask yourself and you may wonder, but why every tax professional doesn't know this? The tax code has over 80,000 pages. So not everyone can know that, and it all depending on your specialty. Some tax professionals may be, on the basic part, some may go further, advance, and so forth. So it's very important that you at least scope out the tax professional that you're using and interview that person to make sure that person can assist you in your situation. So that clock is still telling me that I have to step aside for a short commercial break. So stick and stay with us, and we will be right back.
Financial Literacy is an educational program which airs on Waves 1170 every Sunday night at 9 p.m. Hosted by Hubert McIntosh, a CPA and member of SOFA, the Society for Financial Awareness, with the #1 goal: assist individuals to take charge of their personal finances. Please join us every Sunday night at 9 p.m. on 1170 a.m. or via your smartphone app, Waves 1170, or on the internet at waves1170.com.
Since 1963, Macintosh Insurance has been proud to provide insurance and financial solutions to 1,300 people and businesses. Whether you're looking for life insurance coverage, health insurance, Medicare, legal insurance, long-term care, or annuities, Macintosh Insurance will remain committed to building a solid relationship with customers through practical solutions and unmatched service. To learn more about us, visit our website at McIntoshinsagency.com or give us a call, 561-300-2444. We'll talk to you soon.
Get up with Lifeline Tax Incorporated for tax preparation and tax planning services. Lifeline prepares all forms of tax returns:
1040 personal, corporate S&C, partnership, trust returns,
and all other federal forms. Go to lifelinetax.com or call 561-244-0062.
contact us to help you with your lifeline to a better tax future.
Go to lifelinetax.com or call 561-244-0062.
Are you looking for an accounting firm that you can trust? One with a client-first philosophy? Well, don't worry. Every little thing is going to be all right. For the dedication to professionalism, responsiveness, and quality, Remap offers a variety of services, from bookkeeping and tax preparation to payroll services, IRS problem resolution, and retirement planning. Don't play games when it comes to your money. Go online and search remap.com. That's RE-MMAP.com, or call us at 561-623-0241.
You know what really gets a party started? Indoor baseball. Yeah, just find a broom or a pool cue, and you can use like anything as a ball. Cans, bottles, shoes.
Hey bro, toss me that avocado.
Most party fouls are pretty dumb, but if you decide to drink and drive underage, you could lose your license and your freedom. Underage drinking and driving, the ultimate party foul. Learn more at ultimatepartyfoul.org. Brought to you by the National Highway Traffic Safety Administration and the Ad Council.
Would you like your business to maximize its return on investments? Then contact Wealth Management and Distribution Group. Wealth Management and Distribution Group will help you minimize your tax liabilities. It doesn't matter if you're an individual, an entrepreneur, or a small business. Protect your assets for you and your loved ones. Maximize your return on investment with Wealth Management and Distribution Group. Get more information at WMADG.com or call 954-701-4730.
Welcome back. Welcome back. Thank you for staying with us. Thank you for staying with us. The lines are still open in Broward, 954-792-1170, 954-792-1170, and in Miami-Dade, 305-948-1170, 305-948-1170. You can visit us on the web, financialliteracy.info. financialliteracy.info. You can email us at support@financialliteracy.info. We thank you. So we're back. So as we continue to go through tax planning, the next topic we're going to talk about is tax withholding. This is a topic which should be simple, but it's not. It can be very complicated because everyone who starts a job, you go there and you're going through a job orientation. One of the first form you get, it's a single page document called a W-4. And you would think such a simple single page would be should be so simple, but I can tell you it can be so complicated because what is happening, this is the form that is used for your taxes to be computed. So whatever you put on that W-4, you're telling the government basically this is what you want to deduct per pay period, whether it's weekly, monthly, bi-weekly, whatever the term is, you are saying that is what you want deducted, and you're saying, but that should be simple. Yes, it should be simple, but it's not, because it can be complicated because of the different options you have, because you have to choose a filing status. So you have the filing status, you may be a single person. Yes, that's the easy part. You put single. But then you're a married person, you put married. Yes, that's the easy part. But what gets complicated now is you have two children, you have 3 children. What do I claim? Do I claim 2? Do I claim 3? Do I claim 4? Do I claim 5? And a lot of times I see individuals, all they are doing is relying on that HR person to tell them how to complete the W-4. But that HR person is not a tax professional. That HR person is just giving you an opinion. And a general opinion does not work for you, because remember what we said we're talking about. We're helping you developing a personal economic model. So one person having 2 deductions or 2 exemptions on that W-4 may be different than yours. So just because your friend or the next person beside you choose to put 2 exemptions, it doesn't necessarily mean it's the same for you. It all comes back to your goals. What's your goal? What's your goal? Because this can help in so many ways, because it's going to determine what's your take-home pay. The higher the exemption is, the higher you take-home pay. But you're saying, okay, the higher the exemption is, the higher my take-home pay. But just because it's the higher your take-home pay doesn't mean that's the best for you. Because the higher your take-home pay is, you could be left at the end of the year having a large tax liability to the IRS. Okay, so you says, okay, let's do it the other way. And you says, okay, the lower the exemption is the lower my take-home pay. So that means my taxes are going to be okay because that means I've paid enough taxes. That's a trick again. Yes and no. Because I hear a lot of people sometimes and they'll brag to their friend, oh, I got $4,000 for my tax refund. I got $6,000 for my tax refund. And that sounds exciting. But as a tax professional and a financial advisor, I am looking at it. If you are getting a tax refund of $5,000, $6,000, it simply means that you are not managing your money efficiently. Because what you have just done, you gave the government $6,000 extra during the year, and when you get that refund, you're not getting any interest with it. So look at that. This is $6,000 that you could have used to manage whatever different things. It could be an investment. It could be where minimize your credit card debt, because sometimes you're having credit card debt because there is not enough cash at the end of the week. But sometimes it's not enough cash at the end of the week because you pay too much into taxes. And this is where a simple process should not be so simple, but because we did not take the time to study this, to educate ourselves. So that's why I'm coming alongside SOFA. SOFA is a Society of Financial Awareness, where we're helping one community at a time to eradicate financial illiteracy. And one of the financial illiteracy out there is completing a W-4. This is a one-page document which should be simple. It should be simple, but because of the financial illiteracy, that simple one-page document becomes complicated, and it sometimes messes people's lives up because here it is, they're paying in too much. They're paying in too little. These are the things why it's necessary to seek financial advice. But what is we're coming alongside you. So you have us where we can help you with that. You can go on the website, financialliteracy.info. You can email us, support@financialliteracy.info. We are here live Sundays 9 to 10. The lines are open. You can be calling us. We can help address some of these questions. If you want to talk on the air, we can talk to you on the air. If you want to talk off the air, we can talk to you then. But we are here for you. So you don't have to be going through a lot of these stuff which you could get a simple answer for. I briefly mentioned filing status. Sometimes this is simple, but sometimes, again, it can also be complicated. So let's talk about the times when it's complicated. All right, single is single. That is easy. Married, yes, it looks simple, but sometimes it's not necessarily simple because you can file one of two ways as a married couple. You can file married filing separately, or you can file married filing jointly. And sometimes someone will say, oh, it's always better to file married filing jointly. Well, I'm here to tell you to dispel that myth. Most of the time, it may be better to file married filing jointly, but it's not all the time. Sometimes married filing separately can be better. And you're like, oh my gosh, what time is that? You see, in the U.S., we deal with tax brackets. We have tax brackets. Based on your income, you're in a particular tax bracket. So if your income is $25,000, that's a tax bracket. If it's $75,000, that's another tax bracket. If it's $125,000, it's another tax bracket. So it's tax brackets is what determine the amount of taxes one pays. So if you have, say, possibly say two individuals, husband and wife, making $100,000, just using a general number. So together, that's 200,000. That may be in a different tax bracket. So sometimes married filing jointly put them in a different tax bracket and causing them to pay more in tax. So it's very important where you do an evaluation in such cases, whereas what will be better, as any decent tax professional should be able to give you a what if scenario, will tell you, well, if you file separately, this is what it will be. If you file jointly, this is what it should be. So here it is again, another simple topic which can be complicated. And you ask yourself, why is it so complicated? Wow. Then the question is, there over 80,000 pages in the tax law. The Internal Revenue Code has over 80,000 pages. So you ask yourself, why do we need 80,000 pages? And then we could argue till the cows come home. You can go back and forth and argue why. But our purpose here is not to figure out the why. The why is there. Our purpose is to guide you, to help you navigate through the maze, because it is a maze. 80,000 pages? Wow. So we're here to guide you. So we are going to step away for a short commercial break. So stay with us. We're coming down the home stretch. Hang in there with us. We'll be right back.
Financial Literacy is an educational program which airs on Waves 1170 every Sunday night at 9 p.m. Hosted by Hubert McIntosh, a CPA and member of SOFA, the Society for Financial Awareness, with the #1 goal: assist individuals to take charge of their personal finances. Please join us every Sunday night at 9 p.m. on 1170 a.m. or via your smartphone app, Waves 1170, or on the internet at waves1170.com. Get up with Lifeline Tax Incorporated for tax preparation and tax planning services. Lifeline prepares all forms of tax returns.
1040 personal, corporate S&C, partnership, trust returns,
and all other federal forms. Go to lifelinetax.com or call 561-244-0062.
Contact us to help you with your lifeline to a better tax future.
Go to lifelinetax.com or call 561-244-0062. Meet Bob.
Hello, everyone.
Bob searched and searched for insurance, but grew frustrated with the high number of options.
Oh, no. What am I going to do?
Then Bob contacted the McIntosh Insurance Agency.
Bingo.
The McIntosh Insurance Agency helped Bob get affordable insurance that fit his unique needs.
Oh, I'm happy I found this guy.
Be like Bob. Go to McIntoshinsuranceAgency.com or give them a call at 561-300-2444.
You won't be sorry.
For more than 30 years, Wealth Management and Distribution Group has been helping people save, grow, and protect their money. Wealth Management and Distribution Group was formed with the purpose of helping individuals, entrepreneurs, and small businesses to maximize their ROI by minimizing their tax liabilities. Protect your assets and the assets of your loved ones. Visit WMADG.com for more information. That's WMADG.com, or give us a call at 954-701-4730. Are you looking for an accounting firm that you can trust? One with a client-first philosophy? Well, don't worry. Every little thing is going to be all right. For the dedication to professionalism, responsiveness, and quality, Remap offers a variety of services, from bookkeeping and tax preparation to payroll services, IRS problem resolution, and retirement planning. Don't play games when it comes to your money. Go online and search remap.com. That's RE-MMAP.com, or call us at 561-623-0241.
If you own a gun, you have a full-time responsibility. When you aren't using it, be sure it can't get into the hands of curious children, troubled teenagers, a thief, or anyone else who might misuse it. Your family, friends, and neighbors are all counting on you. Remember, always, lock it up. For more information on firearm storage safety, visit ncpc.org. This message brought to you by the National Crime Prevention Council, the Bureau of Justice Assistance, and the Ad Council.
Welcome back. Welcome back. Well, we are coming down the home stretch. The lines are still open. 954-792-1170 in Broward. 954-792-1170 in Broward. And in Dade, 305-948-1170. 305-948-1170. You can visit us on the web at financialliteracy.info. You can put your questions. You can make comments. Get them to us. We will get back to you within 24 to 48 hours. You can send us an email, support@financialliteracy.info. Support@financialliteracy.info. So thank you for sticking and staying. Okay. Now that we have covered some of the basics, let's discuss the long-term benefits of tax planning. Ultimately, we each have financial goals. Some of us want to buy a home. Others are saving for their child's education. And there are even some of us would like to start our own business someday. In order to reach these goals, we have to maximize our income. And we do so by making wise financial decisions. You maximize your earnings by aligning your financial goals with your tax liabilities. As we have outlined, there are many different ways to reduce your tax burden. Instead of dreading taxes, embrace them. Let us come beside you. Understand how you can reduce your adjusted gross income and how to take advantage of credits and deductions that you're allowed. By doing so, you'll be able to accomplish the other aspects of your financial plan in a tax-efficient manner. The more income you have at your disposal, the easier it will be to meet your financial goals. So that part, it is so critical. One of the things that we even see out there, one of the confusing parts, here's another thing again, which should be simple: college planning. Wow. You're thinking, well, you have a child. Yes, you want to do college planning. My child is 3, 4, 5 years old, whatever the age, and you want to do college planning. You're thinking this should be a simple process, but there are so many options, because if one is living in Florida, or even most states has something called a state prepaid plan. So in Florida, one could have a Florida prepaid plan. There's a federal plan out there. You have a 529 plan, and you also have different kind of stuff that's out there for college planning. So here's a topic that could be simple, but sometimes it's not simple because of the different options. Whereas if depending on who is advising you, you could be getting bad advice and hence could actually jeopardize your child's education. Wow, you remember that was that from Lou Rawls back then, that thing that says a mind is a terrible thing to waste. So can you imagine you're making this plan for your 3-year-old child, a 15-year plan says this child is going to start college at age 18, and you put this in some college planning, and when it comes to that child at age 18, there is no money. That means you just made it looks like a 15-year error, but it's not a 15-year error. It's a greater, because this child who could have been going to college cannot, or if the child goes, then the child is stuck with these students' debt. And these are the risks that you're taking in not seeking a tax professional. So keep that in mind. Starting your business again, we mentioned that briefly. That also could be a moving target. The question out there is, what do I choose? How do I choose? It still comes back, you need a professional. If you're gonna go see a doctor, if you have an ailment, if you have a medical ailment, you're not just gonna go to a store that has a shingle, something on the shingle there says, oh, we help people with medical problem. If you don't see that person is a doctor, you're not gonna go there. So why are you taking those chances with your money? You're taking those chances by not going to professional because you're doing it yourself. So I hope some of this is just getting to you so that we can bring that awareness to you. Some other tax planning considerations I want to address, I briefly mentioned it when we were talking about deductions, is a deferring taxes. This is also another confusing situation out there, because I have people who will come into the office and they will say, well, I am doing my 401k or I am doing my IRA to save taxes. And sometimes I ask, what do you mean to save taxes? Well, the accountant or the tax preparer says, I will save taxes. And I'm here to tell you that that deduction doesn't save taxes. You're like, wow, what is this guy saying? My tax professional say I'm saving taxes. But I'm here to change that. You're not saving the taxes, you're deferring the taxes. And if that word, let's use another word for the deferring. You're postponing the taxes. Wow. If you're postponing just the taxes, that could be all well and good. But you're not just postponing the taxes. You're postponing the tax calculation also. Because if your tax rate right now, when you're postponing this tax, is 20%, what if when you're going to pay that tax, the tax rate is 40%? Wow. That means you just postpone tax and you're hit with a penalty where you're paying double taxes. So these are things, again, that you need to be aware of. Instead of just doing this, someone says, well, do this 401k, do this IRA, you're going to save tax. You're not saving tax. You're deferring the taxes. So please be aware of that. Another one on the same line is investing with before tax dollars versus investing with after tax dollars. And you're like, whoa, what's the difference? The difference is when you invest with before tax dollars because you have not paid the taxes, Uncle Sam don't just want the taxes that you did not pay. He wants to participate in the growth of that investment you did. So these are some of the myths that we just want to help you with, so that you seek professional advice, and we're here to help you with that. So let's go to the final topic I want to talk on tonight, is some of the common tax filing errors. There's some tax filing errors out there, and sometimes we don't realize it, in that we're failing to document or include income. And you could say, but who does that? Why would somebody fail to do that? Or why would somebody fail to include the income? Sometimes it's not intentional. Sometimes it's just an error. Someone could be getting a W-2 throughout the year. They may do a couple of side jobs, because of different talents they have, and they get a 1099. And that person forget that they did that side job, and they should have gotten a 1099, I should say. And they didn't get this 1099. They forgot that they didn't get the 1099. And then they filed their taxes. And then lo and behold, here comes a letter from the IRS saying that they owe taxes. So these are some of the other things. Claiming erroneous deductions. Claiming too much, too little. Oh, another one, this has been minimized much now because a lot of it has been electronic file. Failing to sign tax return if it's not e-file. So failing to include payment or request installment agreement. So we hope you got something from tonight. This was Tax Planning brought to you by Hubert McIntosh, your CPA, a member of SOFR. Visit us on the web, financialliteracy.info. Email us support@financialliteracy.info. Thank you for staying with us, and we will be with you next week. So join us again. Thank you very much. Have a good evening.
Financial Literacy with Hubert McIntosh on Waves 1170 has come to an end. Don't be mad.
She'll be back next week
On
www.waves1170.com.
Hubert McIntosh is a member of the Society for Financial Awareness, www.sofausa.org.
Promotional consideration provided by
LifelineTax.com, the Remap Accounting Firm, the Wealth Management and Distribution Group, and the McIntosh Insurance Agency.
Financial Literacy on Waves 1170 AM
Is a digital media production by Hubert McIntosh.
WAVS 1170 AM, Davie, Fort Lauderdale, and